Good morning, everybody. Good morning. It is Friday, May 19th, coming on 7 o'clock. A little bit late because I was studying some charts and some. Anyway, I sent this out yesterday, the Powell preview, just to give you a little bit of a research back to how the market has reacted when he has spoken and putting these dots on the charts to show you where he has spoken. FOMC meetings are one thing, having him speak another thing. But again, just going back through the days when he has spoken, May 3rd being the last one, March 22nd prior to that, February 7th, he gave that speech, and it was really blasé, but it was right there in the middle of the day. Same as we're getting today, but a little bit earlier, and it was a big shakeup. You had your FOMC meeting in February where we went to where we are right now at 41.95 the day after. And then you got the subsequent move from February down into March, December 14th, on and on and on and on. So again, that's just giving you some prep on that. You've got your email. What I'm looking at, and obviously this ramp up from yesterday afternoon, from Wednesday afternoon when they started talking about a debt ceiling deal could be on the table. It's doable. And we rushed over that 41.36 to that 41.55 and closed above it. And then yesterday's multiple aggressive moves in interest rate discussions where they're talking about continuing to hike higher. The market didn't care, it brushed it off because, again, it's 7 stocks, 7. And the 7 of them decided to pull the momentum in. And at the end of the day, you got your move up there to 42.02. Over on SPY, I believe, let me look back, 420.65. So you missed your 420.69 by 4 cents. But what I'm seeing here, and keep it clean, 2 green closes in a row. 2 green in a row over here in May. You can go all the way back as far as you want. At the end of March, where we had that triple day ramp up at the end of the quarter going into May or going into April, that was the last time we had more than 2 green days back to back. Now, yesterday, I took advantage of the melt up and the meltdown that kept coming down to that 41.55, filled the gap, but wouldn't stay at that 41.55 regardless. I created my own QQQ sheet, and I went back, color coded it, going all the way back, and I'm not familiar with it as of yet. I'm not familiar yet. I've still got a couple of things that I'd like to add to this. I'd still like to do my weeks and my months. But what I am looking at here is you have 4 green closes in a row over on the QQQ. And going back, looking back as far as I can, and middle of March, 4 green closes in a row. After you had that dip from 301 down to that 285, that 285, 286 line, which if I remember, that's your minus 30% line. I'm going off memory. 4 green closes in a row. And go back, again, not 100% familiar with this, but obviously January, very, very bullish, coming off of that minus 260 visit at the end of December. 1, 2, 3, 4, 5, 6, 7. 7 in a row. Over here, looking as well, 2 days going over 1% back to back. Same thing that we had over here. Back over at the end of April, 2 green days back to back, going over 1%, went over 2% on that venture as well. Again, not familiar with it, but again, seeing a streak here of how this is, it suggests, together with the charts, that we should be looking for a red day to the downside, not a massive sell-off, because again, when we come back to it, the SPX weekly candle is 41.2665. So in order to avoid a third consecutive red weekly candle where the other 2 weekly candles were only minus 30 and minus 13, we are expecting that we will get a close above 41.2665, but a very obvious visit a little bit lower and most likely down to that 41.55 area. Now, I've been spending a little time. That was why I'm a little late here. Here is your SPX. And again, over here going into the April move up to that 41.6948, 6.66%, 2.8% drop, 3.4% to what was the May high on May 1. Then we got that drop down on the 4 consecutive days sell down, ABC, 3.31%. Flat running here for weeks, taking full advantage of it, making amazing advantages of this 41.55. And then the last 2 days on debt ceiling, debt ceiling, debt ceiling, which we started the week out discussing about. Don't know when it's going to come out. Don't know what it's going to say. Bam. 41.55 has been broken. And we have these two gaps from back here in August, 42.03, 422, 850, 42.66, 42.84. Now, looking over at what is out there, already out there on the SPX, there is a pretty large straddle at 4,200, and there is a 30,000 straddle at 4,150. Other than that, your volume is insignificant for anything that should suggest there is going to be a squeeze to this side, there's going to be a squeeze to that side, being that it is OPEX Friday. Now, again, coming here onto SPY, and giving a look through SPY over here on May 19th, which is where we are today. And you come into the 420 area. Again, not much out there. You've got 24,000 on the put side, 46,000 on the call side, but you have a pretty extensive open interest out here on the call side going all the way up to 430. Down on the in the monies and going back down, you've got 50,000 over here at 415, 45,000, 44,000 at 410, which again, 92,000 over here, 51,000. A lot of this is straddle. Now, these put sides over here, the 92,000 at 410, very obvious not going to be coming in. But anyway, going back and just looking at what we've got, we should not see a. I mean, Jerome Powell can come out and throw the hammer out. We've got no idea. Jerome Powell can come out and say, "I have no comment." We have no idea. Okay, we've got no clue. But again, looking at where we're at, looking with the VIX can go down to 12. The VIX can go down to 9. All right, so the VIX is just kind of giving us a hint of an indicator. Where we are on the NDX, having filled all the gaps and taken out over here on the August highs, we have already surpassed over here on the 100 extension. We've got a 200 extension if we are going to be using this extension move, which I still don't agree with this, but I have it out there just to give us a guideline. And we have all of these lines that lined up right at 13,600. We do have gaps up here from March, and those will be dealt with as we go into the latter part of the summer. But as for where we are right now, haven't put this down as to gaps that need to be filled, but we have broken above a number of significant areas which are here indicating that you have blown off the blow off, and there's very small likelihood for this to continue and continue to keep moving up to the upside. Looking over here at a Keltner channel, which I love, and using a 4-hour, back over here in February was the last time that we actually came into the region of making contact with it, where at the same times we were coming in extremely overbought over here on the 4-hour chart, and you obviously got your move to the downside with the lows that were placed over here on the year, which came there in March, 3808, below the minus 20% line, which was a very obvious buy the dip situation. The move up here into April, again, grinded across that 4-hour as we were coming up here at the end of March, where we were having those multiple gap up days and runs. And where we are now, just scrolling off to see, to show, again, we're right up on the edge of that 4-hour on the ES. Obviously, it's pointing to the upside, but from where we're at right here with this 4220, it's looking as if there's about 20 to possibly 25 points to the upside on it, where, again, just using the 9 EMA on the 4-hour, pretty significant here that 4,200 on it, which is about 20 points to the downside, is where the change in pace would take place. But again, just looking at our RSIs, the RSI not getting all the way up to overbought and having the price taking place up to where it is shows a hint that it is very possible that we had a very large blow off. Coming on to the 1-hour, back here on May the 5th, we got overbought significantly on the 1-hour, as we did going in to the end of the month with the end of April. And then we had our sell divergence, which provided our dip. Over here, we have been running, and as you can see here on the 1-hour, this is a very, very clear sell divergence that's been running here ever since Tuesday. And you come over here onto your price, and you see how your price has just gone significantly to the upside. So, pending a comment that comes from Jerome Powell later today, we should be expecting something in the range of the 41.55, 41.36 from a very lucky, okay, I'm using the word lucky point of view because of how this is ramped up. However, on the hedge side, in the event that his comments are out there to be a whole lot of peanut butter and toast, 42.2850 is the gap that is to be filled to the upside, having come into contact with the bottom portion of that gap. Thus, the view on the upside, for example, the SPY 420 calls or the SPX 4225 calls would be the position to be looking at. Over here on SPY, show you as well, this is where your gaps are on SPY. So with it right now sitting right at 420, that would be the predominant point of view if you were looking to hedge for the upside or if you were looking to play for the upside as we go into Jerome Powell. And really, I mean, with this being, the 2-year anniversary of my daughter passing, I do not need all of this on my table. I don't need it. So for Jerome Powell to come out and just bitch slap this market, drop it down to 41.55, 41.36, I shut my computer off and I go do what I got to do. But we'll see what happens when 11 o'clock comes around. And if it's not that, I'll obviously be there and be punching all the keys, going out there to make sure that everybody can get out safely and move on to what will eventually be coming in next week if we don't get it today. Have a great morning. I wish everybody the best of luck here on Friday, and I will be here for each and every one of you for everything that you need today.